Hey guys, Kevin here from the Feeler Group, again for another weekly video where we talk about all things real estate, what's going on in the auto real estate market, questions about investing, about anything else that you guys want to know about. This week, I decided let's talk about everyone's favorite topic. Is the real estate market crashing? Is it going to crash? What would a crash mean to people in Canada, or more specifically, people in Ottawa? All right, so I know there's a lot of potential home buyers out there who have been waiting for the market to crash and are sitting here getting happy, thinking this is finally my chance. We're gonna see prices drop and homes are actually gonna start selling for what they see they should be worth. And so I think we'll start off by talking about the reasons why the market is going to crash. And first, we'll pull up an article that was published yesterday that has TD of Canada predicting the home prices are gonna drop about 20 to 25% this year. So TD is reporting that they're expecting to see a 20 to 25% decrease, like I said, from the peak of this year into the first quarter of 2023. And they're seeing that because of the mortgage and interest rates increasing and that we saw a fall in sale prices. The Canadian Real Estate Association data shows that actually the prices hit $629 in July of this year, down 5% from $662 of July last year. BMO also came out with a report this week changing their original forecast, and they're predicting the home prices are going to drop about 21%. Keep in mind that these numbers are talking about Canada as a whole and not specifically Ottawa. So what's going on in Ottawa? Well, the average price of a home in Ottawa was $716,000 in March and $605,000 in July. That is actually already a 15.5% drop. So how much further are we going to see home prices drop in Ottawa? Well, let's do the math based on a 21% decrease that BMO is projecting from the peak in March. But first, let's take a look at the average home prices in Ottawa since January 2005. So you can see that there's quite a few peaks and valleys over the time, the most dramatic ones being this year and last year. But you can see where the peak this year, down to where we sit today at 605, that represents a 15.5% decrease in price. So experts are predicting that we're going to see another 5 to 10%. And you can see that where that looks on the graph, everyone who bought a home before 2021 is not even really going to be affected too much. The next thing to consider is the interest rates. And the interest rates going up is predominantly what's causing the market to come down. And a lot of people are basing their purchasing power or their decision to purchase a home on the purchase price, when really we have to base it on the monthly payments, because you are essentially not buying the home cash, but getting a mortgage and paying the monthly payments. So let's take a look at the average home price today at today's current fixed rate interest rate. So taking a look at the average price of $605,000 at 20% down, amortized over 25 years, at today's fixed interest rate of about 4.8%, you're looking at a total monthly payment of $2,773. So while we saw some bad news in the media this week as far as home prices being predicted to come down more than expected, we actually saw some good news on the interest and mortgage side. Analysts were predicting that we're going to see about another 1.5% increase by the end of the year, and now we're seeing them calm down and predict more about a 1.25% increase. So let's do the math based on the projected decrease in price, but the projected increase in the interest rate. And what does this mean to you? Based on TD's prediction of a 20 to 25% and BMO's prediction of a 21% decrease, we took the average home price decreasing from 21% from our peak in March at $716. That would make it sit at $565,000. So if we take a look at the $565,000 and we do it at the new interest rate, up 1.2% from the 4.8 today, we see the monthly payments actually go up to $2,916,000. So I know I've done this a couple times, but that's a little bit of perspective along with the visual of what it means when home prices come down but interest rates are going up to you as a buyer. Again, we have to remember that we're looking at the projected decrease in Canadian home prices as a whole, not in the Ottawa home prices. The average price of a home in Toronto and the GTA is still almost double what it is in Ottawa, where the income sits about the same. So are we going to see home prices in those cities drop more and see actual less than a 20% drop in Ottawa? That's potentially what we're seeing based on the data that I'm looking at the last couple of weeks. For those of you guys who watch my videos, you know that I like to pull up these graphs all the time. This is the sold properties by week. And while we have been seeing it decline significantly over the last couple of months, the last 2 weeks have seen a rise. So is this just a blip, or is it the start of a new trend? Because we do know that as home prices drop significantly like they have, more buyers are going to come to the market seeing the deals that they can have. People also know that the interest rates are rising, so it could be a last-ditch effort where people are buying before their pre-approval expires or before the next interest rate hike September 7th. So 2 weeks ago when we last looked at this graph, we saw that home prices were coming down steadily as they had been for the last couple of months, and the average home price was sitting about the same price it was this time last year. Now we're seeing the average home prices coming up the same time that we're seeing the sales come up. Again, is this a trend or is it just a blip? Only time is going to tell. So for any buyers who have been waiting for the market to crash, waiting for the right time to hit the market and seeing the news articles that maybe 6 months from now is going to be the perfect time to buy, you might want to look again and see, okay, what happens if the interest rates rise like they're supposed to and home prices in Ottawa don't actually decrease at the same rate the national average will? Well, you're actually going to be in a worse spot. And this is where I'm not trying to sell you to buy a home, but it's things to consider. Because we're talking about the short-term aspects of what's going on in the Canadian real estate market. Everything that we look at on these videos is looking at the real estate market in the short term. What is going on in the next 2 quarters or the next 6 months? Because that is the numbers that I follow and that's what's easiest to predict. But we don't talk a lot about what is going to happen to the real estate market over the long term, specifically in Ottawa. We saw the federal government came out with the budget this year and they're estimating that Canada needs 3.5 million more homes by 2031. But the Ottawa Citizen published an article just 2 weeks ago that says specifically Ottawa needs 100,000 more homes by 2031. So when you look at the fact that Ottawa is in a serious deficit for homes, and also we look at the cost of construction or the cost to replace the homes on the market right now being significantly higher than what the resale value is, I think it puts into question when we're going to see the next housing boom and how long this slump is actually going to last. So more importantly is, while you're waiting for the market to crash, what happens if it doesn't and you miss your opportunity to get in while you can afford a home today? And that is the biggest advice that I'll give to buyers, is to go talk to a mortgage broker, get pre-approved, look at the monthly payments, look at what you can afford. And ultimately, even as interest rates rise, renting is 100% interest. So what is it costing you to wait for the potential of the market going down? That's not to say the market isn't coming down. The predictions are definitely on par with what I'm seeing in the market and what I'm expecting to happen. I'm just putting it out there so that people understand what interest rates mean as well as the decrease in purchase price. Obviously, if you're a seller who has to sell in the next 6 months, you probably want to look at selling sooner than later. And like always, if you have any questions, you can always put in the comments below or send me a direct message. Next week, we're going to do our favorite video, which is the monthly market update, while we take a look at the August numbers. So thanks again for watching, and I'll see you next week.